If we look at the past 25 years in real estate, a lot of the growth has been fueled by the Fed, not necessarily fueled by other factors. So if we were to look at 2003 to 2007, the buildup to the financial crisis, there are many agents who have no idea of that time period. They don't know that the Fed and Freddie Mac and Fannie Mae were playing with both lending standards and credit, and it caused a huge run-up. They might have even heard of the financial crash. Of course, they experienced it, but they might not have been in the business when the market crashed. We had to bail out banks, and we had to actually create things like first-time home buyer credits just to get people into the marketplace. Again, that was a Fed-managed market decline. And what did they do? They goosed it. By 2010, they thought that they had been able to stem the declines. They started lowering interest rates again. And we had this long run, an almost 10-year run from 2010 to just the beginning of COVID, where basically low interest rates were causing the market to be on the up all the time. A lot of agents have only worked in that period. Remember, you've got agents who say, but I've been in the business for 15 years. And in those 15 years, what's been the overall trajectory of the marketplace? Up. And so we've had high velocity, low inventory, high demand marketplaces. Even the 2019, 2020, before COVID, when we started to cool the market, right? The Fed withdrew market support a little bit, started to cool it. Then COVID created a precipitous decline. And then, of course, it flipped it on its head with the lowest mortgage rates in 55 years, created a super hyper-driven market. Again, people were successful with a different skill set. What I'm worried about now is the straight level line that we're seeing from 2023 onward. How do we work in a market that is historically up, but is level, where appreciation is happening, where inventory fluctuates, where the time on market is a lot longer than it was in the past 3 to 10 years? And yet we have to lead people to be successful in those marketplaces by helping them realize it's not a market challenge. It might be a skill mismatch challenge. Now, the first thing I want to remind everyone is one thing we have to do is we have to actually consider this as big of a change as when COVID hit. So we've got to say to ourselves, just like we went on an emergency footing when COVID hit, we need to be very proactive with helping our agents adjust to the baseline, the level line. I don't want to call it a flat line. It's a terrible metaphor. But the fact that the market's going to chug along and be fine for a while, but is not going to be driven by the Fed, means we've got to reskill our agents. And for some of our agents, this change is as dramatic as 2020 was in terms of when the market came to a screeching halt. And then remember that in 21 and 22, we were running around saying, we need more inventory, we need more inventory. So even when things were hot, we had challenges. Plus, we had the challenges of having to sell remotely, manage remotely, etc. As leaders, we've got to treat the current situation with a little bit more urgency than this is a normal market. The answer is yes, this is a normal market. And we've got a lot of agents who've never worked in a normal market, even though they were top producers in the past. And if you remember the teams data that I showed you in our deep dive last week, you will see that teams are actually struggling the most with this change to a level market, because when it was a hyper market, they were hyper productive as well. Now they find themselves in a circumstance with a lot of people looking on their teams for leads and leadership. And as a result, they've not been in this market space before. There's many ripples of these circumstances we need to work on. Now, I mentioned that this is leading to some strange cries for help out there. Friends, when St. Joseph is back, I think we need to pay attention. Okay. Now, what am I talking about? This is funny, but it's not funny. This is a screenshot from a Facebook group of real estate agents. And if you can read the post, you'll basically see This is an agent saying, has anyone ever done the St. Joseph statue thing at your listings? I'm especially curious if you had a listing that wasn't moving and you buried the statue and whatever the mythology is around that. I'm not here to poke fun at anyone's beliefs. I am simply here to say that when agents are consulting with St. Joseph, before they're consulting with their broker and their leader, we need to pay attention, because there are probably about 10 things they want to do before they consult with St. Joseph in a circumstance like this. They probably want to talk about how to have difficult conversations, price reductions, better staging, more marketing, and maybe even just some patience. All of those might be helpful, plus probably others, before divine intervention is required to survive and thrive in this marketplace. So this to me is just a symptom. And you should have seen how many comments there were on this post. Over 200 comments by the time I checked back after taking the initial screenshot. And again, I'm thinking to myself, that's a lot of agents in need of some leadership before they have to really reach for these kinds of circumstances. Hello, I'm Matthew Ferrara. Thanks for visiting the Leadership Club, a special place for owners, managers, and executives to focus on their growth as leaders in their firms and the industry. You can join TLC as a free subscriber, and you'll get the weekly newsletter and explore a whole bunch of open posts, recordings, and downloads in our free section. And if you like what we're doing here and you're ready for some TLC, then consider upgrading your account to access the masterminds, the coaching calls, and our ongoing training. So if you're ready to take your leadership to the next level, then the Leadership Club is the place for you to do it. Thanks for stopping by, and I look forward to welcoming you to the club.